Okay, hi all. I just want to tackle first of all in this video actually the February entry for the 2009 tabular statement. It's question 2 in 2009 paper. So it says a creditor who was owed 8,800 by Yates Limited accepted a delivery van, the book value of which was 9,000 in full settlement of the debt. This delivery van had cost 14,000. So, creditor is somebody that we owe money to. Yates Limited, we'll say, is us. Okay, so somebody that we owed money to, and we owed them 8,800, said, look, if you give me that delivery van, we'll call it quits. Okay, the book value of the van was 9,000. That means that's the net book value, if you like, that we had valued that van at on our books. And our creditor said, look, give me that and we'll call it quits. And the delivery van had cost 14,000. So here's what's going to happen. First of all, I've just done a mini version of this tabular statement just so I can enter the February entries here. And I just put in some of the assets and liabilities that I'll need for this entry and for the August one that I'll be doing in the next video. So first of all, if you got rid of a van, which you did, you gave it to your creditor to pay that debt, well then your vans have to go down by the cost of that van. And the original cost of that van, it says delivery van had cost 14,000, so your vans are going to go down by 14,000. So in here, minus 14,000, goodbye van. Okay. The next thing though is, if you no longer own that van, well then there should not be anything to do with that van left on your balance sheet or in your books, okay? So if you had been recording depreciation all along on that van for as long as you owned it, well then now you must dump that depreciation out of your books because you don't own that van anymore, so you shouldn't have anything to do with it in your books, okay? So how much was the depreciation though on that van? It doesn't tell you the exact amount, but it gives you enough information. It says the book value, or if you like the net book value, is 9,000. So that's what we say it was worth on our books. It had cost us 14,000. So how much had it gone down in value? Well, from 14 down to 9 is a drop of 5,000. And depreciation is just a measure of how much something goes down in value. So the depreciation on that van was 5,000. That's how much we'd written off over the years in that van. So if we want to take that 5,000 depreciation out of our books, well, because van depreciation goes in as a minus every time you're building it up, you put in minus figures. If we want to reduce it by 5,000, we have to put in a plus 5,000. Okay, now if we're to total the two of them, minus 14 plus 5 gives me a minus 9,000 on top. What else happened? Well, we know that the creditor who was owed this said, give me the van and you no longer owe me the money. So our creditors have to go down by 8,800 because we no longer owe that money to the creditor. Okay. And finally, it's the profit and loss that's going to be affected here as well. If we gave something worth 9,000 to a creditor that we owed 8,800, well, it's sort of like we've made a loss on that transaction, haven't we, of 200. So we're going to put a minus 200 in the profit and loss. It's like loss on disposal of the vehicle, if you like. And so then we have a minus 9,000 below as well.